Good morning and welcome to Economy and Markets, where we give you a comprehensive breakdown of the economy as well as insights into the market. This morning, we are going in with news around the NGX from yesterday. So before we go in, let's look at some of the market updates from yesterday. Yesterday, we saw what can be described as the worst crash since the 2008-2009 market crash. The last time we saw a daily rout like that was probably in the year 2008, almost 17 years, more than 17 years ago. The NGX All Share Index went down by 5.01%, losing over 7,454 points to close at an All Share Index of 141,327. This is the lowest since mid-September, because from September up to October, we've seen the market rally significantly. Market cap declined to 89.885 trillion naira, and the year-to-date of the market also went down to 37.3%. Although when you look at it in the context of 2024 returns, the market is still outperforming 2024. Total traded volume yesterday, we saw a massive sell-off, and I mean massive sell-off. 641.17 million shares in deals worth around 29 billion naira. Now, let's look at the top gainers. The market yesterday was quite a wonderful day that we had only 4 gainers in the entire market. We couldn't even garner up to 5. But just 4 gainers. We had NCR gaining 9.282%, Beggar Paints 2.56%, FCMB 0.96%, and Mansard, AXA Mansard gained 0.25%. Those were the only gainers in the market. However, let's look at on the flip side, let's look at the losers. On the losing side, we had 11 stocks decline by 10%. However, we can take space for only 5. We saw MTN decline by 10%, Dangote Cement 10%, Boa Cement down by 10%, Owando PLC down by 10%, Custodian Investment down by 10%. And we also see stocks like International Bearish down by 9.55%. Most of the losers yesterday are NGX 30 stocks. So it was quite a bloodbath yesterday as profit taking of a massive proportion happened in that market yesterday. Let's look at the top traded stocks in terms of volume and in terms of value. First Hold Co., that's the holding company of First Bank, was the top traded stock in terms of volume. 68.27 million shares in deals worth around 2.1 billion naira. Access Holdings 56.28 million shares in deals worth 1.184 billion naira. Zenith Bank 41.9 million shares in deals worth 2.3 billion naira. Then Fidelity Bank, all banking stocks basically, 38.48 million shares in deals worth around 693 million naira. Then Stanbic Hold Co., Stanbic 31.55 million shares in deals worth 3.193 billion naira. Okay, from there we move to the global side of things. While we saw a very bearish market in Nigeria, we saw on the flip side in the US, we saw the market go in the greenish direction. Dow Jones up by 1.16%, S&P 500 index up by 0.26%. The Nasdaq Composite, as a lot of people are now slowly retreating from the AI rave and AI craze of the last few months. We saw Nasdaq also decline by 19 basis points. In Asia, it was also a greenish market. Nikkei 225 down by 14 basis points. The Kospi index up by 81 basis points. Hang Seng index up by 18 basis points. And from today, we've also seen that the Asian market is also slightly up. This is majorly due to the fact that the US government shutdown is over. There is increased tendencies of increased economic activity, especially in the United States, that's having a global impact on markets across the world. In Europe, the same thing. We saw FTSE 100 up by 1.15% yesterday. The CAC 40 from France up by 1.25% yesterday, and the DAX index up by 53 basis points. On the currency side, there was not much of a difference. The Naira closed at 1,439 Naira to the USD, 1,664 Naira to the Euros, and against the British Pound, 1,896 Naira to the British pounds. And that brings us to our first conversation of the day. We're talking about the massive rout in the market yesterday. And on the show this morning, I have Abigael Adesina, who is a research and insight analyst at Norrenberger Group. Good morning, Abigail.
Good morning, David.
Yeah, it's a pleasure having you this morning. First things first, I want to talk about what do you think triggered that massive sell-off? What do you think was the driving force?
Yesterday, the NGX witnessed something we've not witnessed in a very, very long time. We had a huge sell-off. I mean, the entire index was in a bloodbath, majorly driven by, we had usually at this time of the year, from about November to about mid-December, they are usually profit taking as a result of investors, doing rebalancing, portfolio rebalancing. But as a result of that, on the back of that, we also have, the CGT, the effect of the CGT, which came in massively, right? This came in as a result of there was a lot of uncertainty as in respect to a lot of things that surrounds the CGT. CGT moving from a flat 10% rate to about and something that could go as high as 25 to 30% based on the CIT rate, company income tax rate for both individuals and companies 30% or 25%. That's the effect of that. Although we didn't expect the effect of CGT would start immediately, but that investors, took cautious effect, took things into their hands, just there to take profit. We saw full offer, right, on large cap stocks such as Dangote, MTN.
I think we lost Abigail there. We'll take a short break and we'll be back.
Where we had just 4 gainers on the index, it was a real bloodbath yesterday on the NGX.
Second there, we lost you for a second there, but the question I want to ask now is, so we see that institutional investors are doing a lot of portfolio rebalancing now, but what about the retail investors? It seems like there was quite a bit of panic selling. I saw an experience of someone who said Dangote's sugar is going for 55 naira on the market, and he saw an offer of 50.6 naira. The investor was selling for 50.6 naira. Is that also a factor, panic selling from retail investors?
Particularly retail investors, indulge or sell off because of sentiment or going into panic selling, like you called it. Because normally, imagine someone who doesn't have, who had already put their life savings or a lot of money that means so much to them into their portfolio, into the NGX, into the equity stock. They would usually want to also sell off, since you see that their financial goal or their investment goal, the aim at which they invested in that particular stock was for it to, increase or get to a particular level, and then seeing that it was already getting almost lower than their entry point, they would definitely want to sell. I also saw a portfolio, as a matter of fact, 2 portfolios yesterday where the loss on that person's portfolio, as the person said, was already getting lower, was already reaching the person's entire net worth, So you'd naturally expect that investors would, get into panic selling. So not just for retail investors, for institutional investors, they already know that we're going to sell off, and they just do that in a very large volume, and as you saw, this drove the market cap lower than the 90 trillion benchmark, that we've been doing previously.
This question, do you think, so since October 27, that's the day after Donald Trump made a statement about Nigeria, do you think his remarks have really influenced investor sentiment, especially among the foreign portfolio investors in that market? Do you think so?
Although FPIs were cautious with Nigerian equities when Donald Trump, gave that threat, when Donald Trump threat, came up. However, it didn't that particular trade did not affect the NGX, couldn't have affected the NGX this much, right? It might have affected the NGX a bit, made FPI, particularly FPIs, cautious about Nigerian equities. But we saw that when this trade was made, it didn't affect FX at all. It didn't affect foreign exchange. It also didn't affect fixed income, right? So how would it not affect equities? If it had, it would have been just people, just seeing FPIs being cautious. Okay, let's see how this will do, but not necessarily.
So basically, from yesterday's move was basically a November trend happening, portfolio
CGT
rebalancing, had
effect,
nothing to do with all of those
and
other
CGT effect,
factors.
mostly capital gains effect as well.
So the question I want to ask, now is this a good time to enter the market, or what are you saying? Do you think how long will this persist, or how long are you forecasting that this will persist? Is it a good time to enter the market? If not now, when do you think is a great time to enter the market?
You see, today already, yesterday, the Taiwo Oyedele already, made some clarifications, seeing all of those, the bloodbath on the NGX and all of that, seeing investors' reaction to the CGT, to the CGT thing. We saw Taiwo Oyedele came out to clarify, right? Give some further clarities as regards to the tax, and also the Honorable Minister Wale Edun also said that they were going to look into it or do further analysis into CGT during the closing gong at the NGX yesterday. So this had already, we can already see the effect of this positive effect, because as of today, the NGX, life is now back to the NGX, Some of these big names are already in the green today, right?
I'm looking at it right now.
Right now today. Yes, exactly. So some of them are already in the green. Life is back to the NGX. People, that's to show that investors really, really react to news. And yes.
Okay. So the question I want to ask is, if these capital gains tax, no, Wale Edun made a statement that they are going to review, they are reviewing it, coming with a review of the capital gains tax regime. But here's the thing about the previous capital gains tax regime. The 10% regime was not really implemented. So let's say they review it and say, okay, let's come down to 20 or 15%, and they end up implementing it. How do you think it would actually affect the market? The previous one was not implemented, but although it was there, but it wasn't implemented. But now, if they go ahead with the implementation of it, how do you reckon that it will affect the market?
Well, going by the clarity, right, that was also made by Wale Edun by Taiwo Oyedele yesterday, right? He also made some further clarities into the cost base, right? So if CGT comes into play, even if it's not at a progressive rate, right, according to the tax rate or the income of that particular individual, right? If it comes in at a fixed rate of 15 or 20%, let's assume that it's still the clarifications that Taiwo Oyedele gave yesterday will still stand, which is the cost base will now be the higher of your entry point, the amount you acquired it, or the amount it closed at 31st December 2025, right? That gives you more clarity. I want to believe that that's also another reason why we are seeing the NGX in the green today, right? So if somebody wants to tax you, as against before, prior to now, where we didn't know exactly what the cost base to be. There was even some form of information, unclarified, but some form of information about CGT being charged retrospectively. That would be a that would take a high negative effect on investors. So now that we have further clarity, I believe that investors would not react to it negatively so much as we're already seeing today. Also, another clarity that was made by the president of fiscal policies is also around the transactions and deduction of the transaction cost. People would really want to see all of that take effect. And that thing is that most of the assessment to be done by itself. Self-assessment will be the way to go. Although it also
Abigail, we lost you for a second. Can you hear me? Okay, I think we just lost Abigail. So looking at the market from today, before we get her back, let's look at some of the data from today's market. The market is just an hour in. The market opened by 10 a.m. and the time is around 11:20. 20 minutes lap. We already see GTCO 10% up, Nigerian Bearish up 10%, Zenith Bank up 10%, Owando up 10%, PZ Cousins up 10%, Access Holdings up 10%. We've already seen in 1 hour of trading, we've seen 18.7 billion naira worth of shares traded, around 299 million worth of shares traded in deals worth around 18.7 billion. This is this will probably be a day of immense hunting. That's what I would use, because quite a number of investors have looked at entry points and have considered these share prices to be quite good entry points. ASO Savings and Loans is also up 10%. We have a number of 10% gainers as we speak. It's quite a lot. Considering the fact, so we lost Abigail there, but let's also look at this news that Wale Edun has said that they are going to be, okay, we have her back on the show. I have one more question for her. Abigail, can you hear me?
Yes, I can hear you. Apologies for that.
Yeah. So I was just talking about the fact that we have a number of 10% gainers already. Yesterday we had 10% decliners, like full sell offers on some of these stocks. But just 1 hour into trading day, we already seen 18.7 billion worth of trading deals. Like, with the gainers are already we already seen more than around 8 to 9 full gainers. So what's your thoughts?
It's like I said earlier, I'm not sure you heard, because of the network, right? We had this clarity. There's something about getting full information, proper communication. It just helps to boost investors' confidence. And that's what the president of Fiscal Policy and Tax Reform, Taiwo Oyedele, has done. And coupled with the reassurance or further review that came from the Honorable Minister Wale Edun, right? This has helped to, further boost investors' confidence. So they know that whatever it is, we now have clarity. We know what the cost base will be. We know how it will be assessed. We know that transaction costs would be deducted, and all of those things, they will not be deducted. Sorry. So we know that all these things have helped to further restore investors' confidence into the market. I'm not even shocked at, and that thing that has also helped to restore these gains that we're seeing in the market. It's also people taking position, right? Yesterday we saw assets as low as about 20 naira thereabout, and some other stock that lost significantly. That's a good entry point, if you ask me, for some of these large cap stocks. So that's just investors also taking position, taking advantage of the lows in these stocks.
So one of my final question is around the stabilization measures. Yesterday we saw the market go down 5%. Now today we are seeing it already up by 2%, a whooping 2%. A lot of gainers in the market. The question I have is, I know we already have a circuit breaker in place with the 10% cap on gains and on losses. Do you think that there should be any other stabilization measures at this point so that will prevent our market from going? Because now we're already on a rallying. This is another rallying ride. We've seen quite a number of those rallying rides this year, and if we see a rallying ride like this, let's say the market continues like this into next week, will you not see another significant routing on just one day? That another day will just come and there will be another significant routing? Or what was your thought? Or we should just let the market flow as it is?
Like you said, we already have a circuit breaker. We cannot have loss or gain on a single stock more than or below 10%. Right? 10% is the highest you can go, or the lowest you can go in a single day. That's quite enough, if you ask me. And also, saying that that alone, that 10% benchmark helps stocks, right? Helps the ends. That should be enough. In addition to essential information be given to investors. People will not do panic selling or panic buying if there are significant information, to help them make the right decision, such as we already had yesterday. So that should do for now. And of course, what we had yesterday and what we're experiencing today, or what we might probably experience later, was not as a result of the SEC or the NGX effect in all of this.
Okay, thank you so
But of
much.
course, we would welcome any further implementation by the exchange or by the commission to help investors.
Thank you so much for your time and your insight, Abigail Adesina. It's been great talking to you. Thank you so much.
Thank you, David.
Yeah. Now we'll move to a news around Wale Edun, the coordinating minister of the economy and the minister for finance. He made a statement yesterday. He said that Nigeria will likely review the capital gains tax. So Wale Edun said that the government is considering a review of the proposed capital gains tax ahead of its planned implementation in January 2026. The CGT, which forms part of broader fiscal reforms under this current administration, has stirred widespread concern among investors and stockbrokers. Basically, the policy is seeking to triple the capital gain tax on foreign equity investors or on the gains from sale of shares from 10%, a move analysts say has contributed to the recent market downturn that wiped nearly 8% of value in just 1 week. Speaking at the listing of the Mofi Real Estate Investment Fund that happened on the Nigerian exchange on Tuesday, Edun said government will listen, analyze, and decide on the best approach for Nigeria. He assured stakeholders that feedback will be taken seriously to ensure optimum results. The minister's comments come as investors anticipate clarity on fiscal policy amid fears that the higher CGT could dampen foreign investment inflows. Market watchers also believe Edun's signal for review could help restore investor confidence and ease the bearish sentiment that has recently swept through the equities market, even though the market is still around 40% up since January. So after the break, we return with another conversation, this time on the National Payment Stack. Please stay with us. Welcome back to Economy and Market. We're moving on to a conversation around what is now a new payment settlement system that was developed by the Nigerian Interbank Settlement System, NIBSS. So on Monday, we talked about the National Payment Stack, which is the new settlement system that NIBSS developed. According to NIBSS, they said the first transaction on the NPS, what will be known as NPS, happened on Friday around 11:56 a.m. According to a statement by NIBSS, they said this marks the dawn of a new, seamless, secure, and inclusive financial transaction. Basically, what is NPS? What does it entail for the payment settlement ecosystem in Nigeria? This is what we want to converse about. Is NPS replacing the NIP? The NIP is the instant payment platform that was developed in 2011, still by NIBSS, to basically enable digital transactions to take place. And on the show this morning to give us a comprehensive understanding of what this entails, I have Motunrayo Kuyejo, who is a fintech engineer. Good morning, Motunrayo.
Hi, good morning.
Yes. So first things first, let's start. What is a National Payment Stack? How does it differ from NIP? What does it?
Okay, so the National Payment Stack (NPS) is just like an upgrade to the current NIP, which we currently use to transfer money at the moment. So it's a new infrastructure built by the NIBSS.
Yes.
So it's just that it's built from ground to top. So it's supposed to be what we're going to be using in future for payments. And then I think a major difference is that the NPS now uses the ISO 20022, which is like the international standards for payments, sending money across.
Okay.
Yeah. So that's like a major difference between it.
So one question I have is, I'll refer back to NIP, right?
Okay.
Is NIP, so I've seen a number of fintechs in Nigeria come up and say we have built a payment settlement system.
Okay.
How does it differ from NIP? Is NIP not the single payment transfer, instant payment settlement system that exists in the country?
Yeah. So NIP is the current instant settlements thing that we have right now.
Yes.
But the NIBSS is now bringing NPS, which is like a national payment system, national payment stack, which is supposed to like replace the NIP. But the replacement is not like, it's not going to be like done immediately right now. It will be phased out. So at the moment, banks, they mentioned that they tested with Paystack,
PalmPay and
Wema. So over time, banks and fintechs will have to like test their system and ensure that they meet the NPS standards before like the migration will now occur.
Okay, so the participating institutions, the banks, the fintechs will have to ensure that there's a standard they have to meet before they can integrate NPS.
Yes.
So it's not in competition. I saw a particular post on social media where someone said they are trying to enter into competition with InterSwitch. Please respond to that.
So InterSwitch also use NIBSS, right, to make transfers.
Yes.
So NPS is simply like an upgraded NIP. So it's like we're moving from like 2G to like 5G. So NPS is faster, it has more data, so you can get like better analytics from NPS, and then reconciliation is expected to be instant because it's expected to be faster because we now have more data between more data between the sender and then the receiver. Yes.
So one question I'll have one question is, do you think that they can trace payment to kidnappers using this NPS now?
I believe that even with NIP we can trace payments
to kidnappers.
Yes, like you
before where the account or where the
So right now, if you send money, you need to have like a PVN before you make payments, right? So even with NIP, you can actually trace anybody. The DSS can trace people if they want.
Okay, let's move on. Let's move on from that. And NIBSS is saying that this NPS is in accordance with ISO 20022 standards. What does that really mean in plain language? What does it mean in simpler terms?
Okay, so ISO 20022 is like the international payment standard.
Okay.
So they want us to have the same standard as SWIFT. So ISO 20022 requires that they collect more information than they currently collect. So right now, if you are trying to send money to somebody, the bank would send your sender details, like where the money is coming from, right? And then maybe you put like a narration, right? That's just the
timestamp.
Well, do they really send? They send session ID and then the timestamp too. I don't think everybody they don't send it to you as a customer, right? But for the ISO 20022, it's a global standard, right? So they are not just collecting your personal information. They are collecting the timestamp of when the payment left your own account to when it was received
on the other
yes,
account.
there are also some kind of codes that they'll be tracking. For example, apart from the narration which you are going to give, they can trace like the source of the funds, where the money is coming from. There are more data will be collected, but we need to see it in play. Data like transaction code, is this like some information that you're not collecting right now? Maybe they can start collecting like things like, is it a salary? Is it rent?
Okay.
Your narration can be, I'm sending money for something else.
Is it funds from illegal means? Is it money laundering?
Yes. So they are going to be collecting more data than they are currently collecting. That's just like the major difference between NIP. And the more data we collect, the better it is for analytics. So so we now have more analytics.
So one question I have is around data concerns. You said they're going to be collecting more data. Data. So that means there's going to be need for more cybersecurity. Let's say cybersecurity concerns.
Yes. So more data means that there could be like more threat. But that data is not just the work of NIBSS. So it's a shared responsibility. So NIBSS will do their parts. Banks too have to ensure that they do their parts too. Fintech, everybody that is implementing NPS, they have to do their own part of the job so that customers' data are secure. Because we're collecting more data. We now have timestamp. We have details of payments. We have sender and receiver details. We need to ensure that we're protecting this data. So NIBSS has their own part to do. Obviously, they said that they are using encryption and more cybersecurity stuff to make it better. But banks need to do their own part. Fintech and everybody that is integrating with the NPS too, they have to do their own part.
So the question I have now is, that means there has to be a place for more training.
Yes, and then you know that before you can use NIBSS, NIP, you have to get like a license from NIBSS. So obviously in the process of getting the license, they would check all these things and confirm that everything is in place before you get the license to use it.
Okay, there has to be a license to use it.
Just like the NIP.
Okay. What are the expected changes that you think fintechs will be making in line with NPS? Some of the fintechs, do you think they would have to okay, now the question I want to ask basically is, do we have the technical capacity in Nigeria? Do our companies, banks, do they have the technical capacity to implement these standards that it is, or do we probably have to hire expatriates?
Well, obviously, but Nigerians are good engineers,
Okay.
So we have the capacity to do it. So what we just need to do is to improve our architecture. So, for example, say one of the standard of ISO 2022 is to collect, say we are now collecting timestamp of when the payment was sent and when it was received. We just need to upgrade our current payment system to collect that. So this would like take time. That's why NPS is not just going to be immediately. It's going to take time before, it's going to take a while for banks to test and confirm that it works with what they currently have existing, right? And then customers would not get disrupted. So they won't even know that anything's happening behind the scene. You just send money, and when they test and see that it's going, banks will face it out one after the other. So it's not like everybody will just stop using NIP today and just move to NPS. So it's over time.
So now there's something around faster transaction time.
Okay.
Why? Why does it guarantee faster transaction time? What's the?
So you know that they said they built NPS from ground up. So
okay.
NIP was built like 14 years ago.
Yes,
that's like 2011. Yes. Yeah. So imagine we're using NIP from 2011 and it's still fast. Like you can send money. You can send money from like your bank account to my bank account and you receive it almost immediately. So now imagine like a technology that they are building from ground today, or they started building it like last year or this year. So imagine like the advancement in technology from when NIP was built to now NPS. So NPS is like, they're not upgrading NIP, they are building something new. Yeah, something new from ground. Yes.
So one other issue that Nigerians face is instant payments, and I know that there's been a lot of effort in curbing it, and in fact there's been a lot of improvement. Is the part of glitches in payments. So sometimes you make transfers, it doesn't reflect in the receiver's account. It reflects on your own account, the sender, it doesn't reflect in the receiver's account. Sometimes it leads to some people have lost money. Some people have lost millions of naira because of issues like this. And it just seems like the transaction goes poof in the air. And you are not able to trace the money, the cash, where the cash went to. Then it leads to a lot of fraud and stuff like that. Will this solve the problem?
So potentially, because the NPS is faster, we would have like we should have lesser glitches. But you know that most of these glitches is not just NIBSS fault. Some of it have to do with like the network infrastructure. For example, I'm trying to send money from a bank to another bank, let's say from Wema to OPay, and then maybe one of the bank has a downtime at the moment due to their network. So it's not necessarily NIP's fault that the transaction did not go through. It's the bank network. So we might still have these cases, but because transactions are faster now, I mean, they happen in milliseconds. So we expect that it would be fewer than it used to be.
Okay, now another question, the last question I have finally is around data centers. How much need of data centers will this need? We're talking of more data, basically.
Okay.
Do you think that the amount of data that we would probably need now would lead to maybe a surge in the amount of data or memory capacity that our banks, fintechs will require at this point?
Yes, because we're collecting like more data, which is, so say before we're collecting like maybe like 1 KB of data, we now have to collect like 2 KB. So we definitely need like more, we need to collect more data. So we need more storage. Okay. We need more storage to keep things. So depending on where the banks have their data centers, I'm sure that their data centers actually collect like a lot of memory already. So each bank would have to do it like internally. I'm sure NIBSS have done their own part because they are the ones building. Yeah. So each bank will now have to, first integrate with NIBSS and check like, okay, what do we need here? Do we need to do an upgrade on our end? And then when they are ready, to initiate NPS, they would then inform NIBSS that, oh, we're ready, and then they can now go ahead.
Okay, but there's no deadline to when they can implement this NPS for now.
NIBSS did not mention any deadline.
Okay.
Yeah.
Okay, thank you so much. Thank you so much for speaking to us on the National Payment Stack. I have Mutura Yokoyejo, who is a fintech engineer. And that's all we can take on economy and market for today. We've spoken about the market route from yesterday, and we're also seeing that the market is back to its normal state today. We've seen a lot of very early rallies this morning. And we also spoke about the National Payment Stack. Thank you, and I'm David Olujinmi.